Hi everyone, I'm Ken, the inventor of the CTKS method that shows where smart money is buying and selling. Each day I seek to give you an edge in the market using professional smart money rules and thinking based on my more than 30 years experience in financial markets, to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. If you want to get the institutional edge, please subscribe. You'll find we have one of the best communities on YouTube. Let's run the numbers. Bitcoin is currently up 0.85% to 23,444. Ethereum is up 1.07% to 1643. Please note, I do not have WhatsApp or Telegram. If you're interested in applying for the Beardy CTKS Partial Masterclass Scholarship, the links are in the description of this video. In other news, Coinbase CEO reiterates that staking products aren't securities. This is aimed at Gary Gensler. Gary Gensler has a long history of protecting investors. Oh, did I say protecting investors? Looking at the main markets in the past trading session, there's a lot of interesting things going on here. When we look at the DXY actually retraced. Did that impact gold that much? Not really, because yields came up. Demand destruction is high on the Fed's list at the moment. What did we see with oil prices? They came up. The energy companies did quite well. We had an actual pullback in terms of junk bonds and high-yield corporate bonds. That's not such a good thing. We want to see those rebound up to the positive side for a follow-through rally. Why did yields spike? Because yields are becoming the story of the day. They spiked because yesterday the FOMC meeting probability of a 50 basis point increase was 24%, and today it's 30.6%. Of course, that drives yields up. Please let me know if you would like to see more on the stock market. If you would like to see more, just leave a comment. Just say stock market. I'll get the idea. The pace of technological change is just astounding, and it looks as if artificial intelligence is going to take over the world. Thinking about innovation, just think about this. Do bookstores like Amazon? No, they don't. Bookstores were killed off by Amazon. To a large degree. Of course, some bookstores are still here, but the dominant share of bookselling is now done online. What about Airbnb? Well, hotels are not crazy about Airbnb. What about the taxi associations? Didn't they try to pass laws to stop Uber? Yes, they did. Did it work? No, it didn't. How do cinemas feel about Netflix? Well, they're not wrapped. What about oil companies? What do they think about Tesla? Well, Tesla's not high on their best friend list. And what do banks feel about Bitcoin? Banks hate Bitcoin. It's rat poison. Why is it rat poison? Because Bitcoin disintermediates banks. What does that mean? Disintermediation basically means sidestepping, to do business without the intermediary. Bitcoin allows everybody to become their own bank. Of course, banks don't like Bitcoin, just like taxi associations don't like Uber, hotels don't like Airbnb, bookstores are not crazy about Amazon, and the cinemas just wish Netflix never happened. But if you look at Bitcoin, Uber, Airbnb, Amazon, and Netflix, and to a degree Tesla, their success actually revolves around the internet. They're all internet-based companies. Except, of course, for Bitcoin. Sorry, Gary. Bitcoin is got nothing to do with securities, and Gary Gensler has already said so. I'd like to give you a different perspective on Bitcoin's chart today. We're going to look at moving averages. Oh no, Ken, what's happened? Yes, we're going to look at them because retail loves them. But what does this actual chart of Bitcoin represent? It represents in one word, adoption. Let's talk a little bit about daily moving averages. A golden cross occurs when a short-term moving average actually cuts through a longer-term moving average. It's typically the 50-day cutting through the 200-day. And we can see that that occurred around the 6th of February. But it's not just the 50 and the 200, it's any short-term versus a long-term. So the 100 cutting through the 200 also creates a golden cross statistically. You're probably going to start hearing a lot about double golden crosses. This is a really good thing to keep in mind. You must understand the retail mindset. The retail mindset is all about just whacking an indicator on a chart. Unfortunately, when you look at long-term moving averages, they're just historical price. And a lot of people say, yeah, of course, that's what they do. But the key is they can't predict the future. They can actually give some important information on sentiment shifts in the retail mindset. A very interesting thing that we see here with Bitcoin at the moment, it's throwing a very strong technical signal that it wants to go up. I'm going to zoom in and show you exactly what I'm talking about. One important thing that you'll note when we actually zoom in here and see that golden cross, what was it accompanied by? A lot of people said, the golden cross is in, and the price went down. And they would have thought, oh no, I'm wrong. The golden cross isn't there at all. I'm getting out of the market. Just when the market actually retraces. And what does it do then? Of course, there's a lot of long tail rejections up here. Too many sellers pushing the price down each time. But the concept is the golden cross was actually positive, but not on that day. Not on the next day either. On the day following, or the day following, or the day following, or the next day, and the next day, the next day, and then it was. Why am I making a big deal about that? Because we could see the same kind of behavior happening. Even though there's a positive momentum, we can see there are a number of levels of support and a resistance has been overcome. It doesn't mean that it's just going to go straight up from here. It could well go down before going up. You need to prepare yourself for this. The reason I said you don't want to be retail, when retail hears of a golden cross and the next day is positive, and it was positive, they would go all in and more, only to see the positions reverse against them, because institutional investors and traders love to play with the street's emotions. You must be aware of this. Also, the institutions want to be on the right side of the percentage. They want it for less if they know it's going up. Also bear that in mind. We have a smart money mindset. That's why we actually do our 3-dimensional risk management code each and every day. We know that we control the trade or investment, but it's the market that controls the return, and we don't get sucked into the retail mindset. The first thing, we understand prices are negatively biased. This means the price is more likely to go down than to go up. Volatility can also create spikes down that are very, very short-lived, but if you've got orders waiting there and you're confident as to the direction of the market, it can be very, very profitable. With the CTKS method, we are smart money. We know what they know. And the Stanfield zones have just updated. We can see, based on the Stanfield zones, that we've got quite a lot of support from down here at around $23,035 up to about the 23,320 mark. This is very important to understand. Smart money will be looking to come in here and actually buy, absorb this particular supply and push the price up. You can see we've actually already made a higher low. This is a low, this is a low, but this one is higher than that one. That's why it's called a higher low. It actually also means that the next area of support is around the 23,516 level. If we get above the $24,000 Stanfield zone, the fireworks could really begin. If you'd like to know more, just leave a comment, tell me more, and I'll go into it in more depth in tomorrow's episode. Professionals have a very specific way of looking at market price action. We stack probabilities. That means that we're not like a light switch. We can't go just on or off. We're like a dimmer. We actually come in slowly and go out slowly, if that makes sense. Let's have a look at liquidations. In the past 24 hours, we can see 72.78 million across 20,391 positions. And when we look at total liquidations, about 65% over the past 24 hours were short liquidations. What about the past 12 hours? Went the other way, 55% long. What about the past 4 hours? Whoa, 87% short. And what about the past hour? 80% short. So we can see the shorts are getting liquidated at a decreasing rate. But that may actually also increase because we're getting above a resistance level. We know that we're under support. So when you think about this, the probability is for the market to go up at this current time, but always have your three-dimensional thinking playing out. The greatest gainers yesterday were AGIX, Immutable X, FracShare FXS, EOS, Synthetics, Maker, DYDX and Quant. We can see that as far as the forward momentum carrying it through to the next day, AGIX didn't quite go anywhere. It went a little bit up, but it didn't go as much as we would have hoped it to go. IMX retraced. FXS held its positive momentum. EOS did very, very well, kept on going up. Synthetics also. Maker just went parabolic. Good on you, Maker. And DYDX continued up. It looks like Quant is forming a bit of a base here. It could be very, very interesting to keep your eye on that one. Please let me know in the comments, do you prefer to get into something like Synthetics, SNX, as it's going up, or something like Quant, as it tends to base? Please let me know. The greatest gainers today are CFX, Maker, STX, Filecoin, Aptos, APT, DYDX, Phantom, and AGIX. The interesting thing, if you were to look at any of these particular charts, in the top gainers, which one would you say is the most interesting to you? And please let me know. This is a very, very important skill for you to develop. And as a community, we're all about active learning because that's what the market rewards. The more knowledge you have, the more profit you make, full stop. Quite a few people have been reaching out to me and directly messaging me saying, Ken, how do you actually transform this particular list into a series of profitable opportunities? Well, let's say that we were looking at Filecoin and we said, well, Filecoin is just kind of getting going. It may pull back to a base, but what are the other Filecoin-like cryptos doing at the moment? This is something I teach inside the masterclass. It's very, very important to understand groups. When we look at Filecoin, BitTorrent, Anchor, Hot or Hollow, Arweave, Ocean, Seacoin, and Storage. They're the top 8. Now, when we look at these particular patterns, what do we see? Which one would you get into? Which one gives you the greatest security? Would you get into, for example, Anchor? Or would you think that Hollow or Hot could be a little bit safer? Or what do you think? Ocean is just starting to get above resistance, but it's just retracing at the current time. Or is it Arweave? Or is it Seacoin? Or is it Storage? Of course, it's a pretty tricky thing when you're just starting off. That's why you need a lot of knowledge. We have all sorts of techniques, and one of the best is pattern recognition. Looking at the list of the greatest losers yesterday, we had LDO, Phantom, ICP, AVAX, TWT, Trust Wallet, BAT, Basic Attention Token, Atom, and HBAR. Now, what did we see in these particular fingerprints? We saw that basically LDO kept on coming down, but Phantom actually came up. This is a thing. The greatest losers and the greatest gainers often swap positions with each other. Just because it's on the greatest loser side doesn't mean that you don't pay attention to it. Actually, it could mean that it's quite good to get into. But of course, you must have knowledge. Looking at the greatest losers today, we can see Clayton leading the pack. XEM or NEM. After that big upsurge, it came down very, very problematically. That is quite a drop. If you were caught up here, to end up down there would be absolutely heartbreaking. That's why you've got to be very, very careful of these spikes. Manage them well, my friends. It's very important to look at Bitcoin's gravity because Bitcoin's gravity actually tells a story about how the alts could go. Just always keep your eye on that. We can see Immutable X, number 4. EGLD, Elrond, coming down, just breaking down below an area of support. And then what do we got? We've got USDD, USDC, which is Circle, BUSD, Paxos, and the DAI stablecoin. Stablecoins in the top losers. Interesting. It's definitely a trader's market. I've shown many trades over the past week which show an annualized return on investment, which is quite nice. Volatility definitely is your best friend. And the crypto market is a wonderful market to be in because the volatility is just outrageous. For example, if you could get 10% on $1,000 and keep compounding that, you would end up, and just do that in a week, you would end up with $144,000 at the end of the year. The only reason that I raise this is because a lot of people are chasing after 100x, 200x, all of the X's, but actually you're shortchanging yourself if you actually trade in and out, and you must know what you're doing. But if you can do it consistently with knowledge, you will do far, far better. Our community only goes long at spot. We don't use derivatives. We don't go short. And every gain I've ever showed you is actually going long at spot. When you're going long at spot, you actually own your position. You cannot get liquidated. We are sharing this time together because you have a goal to be a professional. You want to know how smart money thinks. And you don't want to be retail because retail typically gets slaughtered financially. It's counterintuitive, but when you're actually professional, you do not focus on the money. You focus on systems. You do not mind if the market moves in a wave, and actually you want it to. As a community, we buy on red, so that means we need the markets to retrace. This allows us to get on the right side of the percentage. Retail does the exact opposite. They get on the wrong side of the percentage. We focus on positive excellence because positive excellence is all about courage, and the only thing that can kill fear is courage. Apologies for the delay on this particular video. There were so many fantastic comments in yesterday's video, I just wanted to share them, but I realized this is getting a little bit late. Instead, we'll just go to the CTKS Creed and I'll read out those comments tomorrow. As a professional, your habits make you or break you. And habits are a really good thing to talk about. Habits come from your mind, so a better mind creates better outcomes. Why does it do this? Because it creates better habits. Always remember, all results come from the mind. If you're not getting the outcomes you need, you only need to change your mind. How do you change your mind? You change your habits. I'd love to hear your thoughts on habits. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you tomorrow. Bye for now.